Hello, and welcome to South King County's Real Estate Update. Today is February 26th, and I am back here 3 p.m. to bring you the most current real estate news from our area. We'll touch a little bit on what's happening around the nation as well. I'll go ahead and jump straight into it. One second. There we go. All right. So as I said before, this is South King County Real Estate Update for February 26th. And just a couple of housekeeping items. I do have 2 new classes coming up, 2 brand new sets of curriculum. I have one for buyers and one for sellers, and both are very much hyper focused on the 2021 market. What can you be doing right now to maximize your position in the market? Whether you're a home buyer or a home seller, I have tips and tricks for both of you. So if you're interested in either buying or selling real estate in 2021 or shortly thereafter, I really highly encourage you to sign up for these classes. They're not like it's not a basic home buyer or home seller class. These are laser focused on what you can do to succeed this year. Spots are running out for my sunflower paint night. If you would like to participate with materials, you'll have to contact me directly. I have shut those tickets down. They were almost sold out, and I had a couple people that I needed to, they hadn't gotten a chance to sign up yet. So if you do want to do the materials, contact me directly, and hopefully I'll still have 1 or 2 spots available. If you do want to join us just for the webinar or the stream portion of it, you're welcome to do so. The registration link is below in the description. So what happened this week? So I just had a really interesting conversation. So this isn't a story about my client, but I was having a discussion with a lender earlier today that he had a client that had put an offer in on a brand new construction home early November, got under contract, and they closed late January. So that home was, he got under contract at 8:30. This was in Snohomish County. It's a Lennar property up there. And so he got under contract at 8:30 in early November. Those same homes with the same, embellishments, the same features pretty much, are now being advertised for $1,070,000. So a $255,000 price jump in just a few months. What's going on there? Home prices have increased, but there's no way that they have increased that much in a specific neighborhood in like 3 months. It's shocking. So the appreciation, home appreciation is part of it. The home values in the area, that's certainly a factor. But there's something else going on here. And I will touch on this a little deeper in a second. But building costs have skyrocketed throughout 2020. There was supply chain issues. There was, a lot of factories shut down because of coronavirus. And there was delays in delivery. There was, trucking and transfer delays. So all of these things have added up to just a huge increase in construction materials. So the lender that I was talking to, he and I were decided that like these building materials are really, that must be where this price change is coming from, because there is certainly no way that that's just home value appreciation. So we'll go ahead and jump back into it. All right. So here, builders grapple with land shortage, soaring lumber costs. So this is exactly what I was talking about. Home lumber the price of lumber more than doubled over the last year. So it is at an all-time high. Construction costs are at an all-time high. If those builders that don't have that land purchased already, the lot prices are going to be a lot higher. They're harder to find. The demand for those lots has just shot up. So just finding the lots in the first place is a challenge. And then they cost more once you do find them. And the sales of new homes jumped 19% over 2020, and just 4.3% climb in the last month alone, which is just shocking. So I'm definitely just like looking at the difference in price on this home that I mentioned up in Snohomish, and seeing this article. Okay, so I'm understanding where some of these building costs are coming from. Plus, the strong demand for home ownership is creating a lot of demand for all the lots. And the low mortgage rates mean buyers have a greater purchasing power. So yeah, basically people are working from home. They want larger homes. There's more people entering the job market, and this demand for these homes has jumped. However, the cost of building them has just skyrocketed. So that'll be something that home buyers have to contend with over the next little bit. And okay, Seattle among top markets as US home prices increase by double-digit percentages for the first time. So nationally, home prices rose 10.4% year over year, which is absolutely phenomenal growth rate. It's shocking. But in the Seattle area, we raised 13.6 in December compared to a year earlier. So second only to Phoenix. They have held the top spot for 19 consecutive months. But yeah, Seattle's been number 2 for quite a while. And you can see here the national average compared to the Seattle area. And this is since 2016, 2015. And so yeah, over the longer term, Seattle area home prices have risen 55% from December 2015, according to the index. So on average, if a home was purchased in December of 2015, it would be worth 55% more now. So it's a pretty good return on an investment. So that brings us to our Market Stat Minute. Taking a look at the new listings, 651 new listings in the past week, 908 pendings, and 718 sold. And you'll remember this big dip I mentioned last week in the pendings. I had predicted that was going to jump back up this week because we had a lot of snow a couple weeks ago, making it hard to for buyers to get out and see the homes. So there were a lot of homes that sat on the market longer during that period of time than they would have if it hadn't snowed. And so if you look, the pendings is a lot more than the amount of new listings. And we've seen that for quite a while here. So that may bring you to ask, how can there be more pendings than new listings? So this is a sign about how fast our market is moving along. So say we have 10 new listings come on the market this week, but 5 of them go pending before we get our weekly stat. That means we would have 5 new listings and 5 pendings. So if we are having more homes come on the market now and go pending almost immediately, like within a week, than new listings that are sitting around on the market. So that is where this discrepancy is coming from, because the pendings won't move to sold for, they usually pend for 30 to 45 days. So that's where that discrepancy is coming on. The listings pended, some of these could have been new listings within the past week, but now they're pending. So they're showing up in the pending category. And if we take a look around the nation, this is showing time, so key box entries into homes. And we had that big dip a couple weeks ago, or showing up last week, for the nation as a whole. And that also due to snow and crazy weather. There was a huge portion of the nation that had really insane weather over this period of time. So that really affected the showings nationwide. So mortgage rates last week, we were at 2.81. And if we jump forward to this week, the Seattle Times article states that we're at 2.97. So decent jump here. Compared to a year ago, we were at 3.45. So definitely lower than we were there. However, if we look at today's rates, these it's 3.29. These I grabbed after 2 p.m. our time. So 4 p.m. Eastern time is when the markets close. So this is like our end of day snapshot. However, the things that happened at the end of the day suggest that we will see a slightly lower interest rate on Monday when these numbers come back up. And this is also from mortgagenewsdaily.com. Mortgage rates are now well over 3%. So this one, mortgage rates wish they were still at 2.97, the number conveyed today by Freddie Mac's weekly survey. This was an article from yesterday. So Freddie's data is accurate when it comes to capturing broad trends over time, but really can fall short when there's a lot of volatility. And yesterday was by far the worst day when it comes to volatility. There's just so many things going on that's playing into these crazy rates right now. And a lot of lenders are charging, a full half point higher than the beginning of last week. So that's a really big jump for a single week. But I didn't have time to break all this apart since this just came out. Well, I just gone and checked the interest rates of the Seattle Times against the Mortgage News Daily. And usually they're pretty close, but this was way off. And so I was trying to gather all these data points last minute. But you can see that all of these bullet points are things that are leading into this really extremely volatile market. So I just thought it was, I would throw this up here so you could see how many things are coming into play. So what's going on here is, if we look at the treasury rate, the 30-year mortgage rate has moved with the treasury rate for a very long time. And you can see the correlation between the lines pretty clearly. But since October 2020, our interest rates have been going down for the most part since October, but the treasury rate has been going up. So this has created a lot of, I don't know, a lot of experts had predicted that interest rates would go up in the near future. So this is partially showing the data that they're looking at to come up with that conclusion. So I do think that we'll see a dip in interest rates next week and maybe going forward a little bit. But the overall trend for 2021, I do believe, will be upward. So this this chart was taken from a few days ago, but you can see over the decades, 70s were close to 9% on the average. The 80s were close to 13% on the average. So where we are today is really great historically. So it all depends on where you're coming from. So if we're coming from, 2.2 and we're looking at 2.8, that looks really scary. But if we were sitting up in the 80s at 12.7%, 2.81 would be an unreal deal at that point. So if you take a historical perspective of the interest rates, yes, they did go up quite a bit over the past week, but not enough to really dislodge us from the historical low standards. I showed this one last week, but I just thought I'd throw it in here again. For a $500,000 home, if the rate was 3%, the monthly payments would be $2,108. But if you bring that up to 3.5, just half a percent higher, that brings your payment up to $2,245. So $137 per month difference for 0.5% change in interest rates on the $500,000 home. So if you have any questions, please feel free to reach out. I am here to answer your questions, chat about the real estate market in your specific area. And my information is on the screen. It's also in the description below. So please don't hesitate to reach out. I would love to chat with you. Thank you so much for joining me for South King County Real Estate Update for February 26th. I will be back here 3 p.m. next Friday, right here live on Facebook. And make sure that you like or subscribe, whatever platform you're watching this on, whether you're watching me live on Facebook or the replay on YouTube, Instagram, or my website. Make sure to like and subscribe so you get alerted of these videos in the future. Thank you so much for joining me, and I will see you next week. Have a good one.